Okay, the following clip is an excerpt from our live beginner lab on YouTube, and we do that every day at 8 AM EST. It goes for 30 minutes, and then after that we flip over to our private group for another hour, and we go over the markets, and we do class. You can find what we do over at www.algofactory.tech. Also, the link to our website and social media is all here on YouTube on our main page. However, today, this clip is going to go over what we discussed about pips and the Forex market. So the Forex market is actually measured in pips, and it can create a little bit of a learning curve on how to place your orders. So I tried to make this as mentally accessible as possible and explain this as simply as possible. And I did provide some tools as far as how to calculate your position size. So this is a pretty good clip. Enjoy it. Stick around right afterwards, and it'll give some more information about what we do and where our website is. Enjoy. Right now, the euro is now worth $1.06 and some change. So $1.06720 approximately right now. Okay. So let's go ahead and type that out. 1.06720. 06720. Okay. So that's the price right now, more or less. It keeps fluctuating. What is a pip? Well, the pip is we divide this up into a pip is essentially 10,000. I can't even talk today. This is terrible. 10 thousandths of a cent in this case, and that's how it is with USD pairs. Okay, so now if you are looking at other pairs, then pips can actually be a little bit different. But for the most part, you're going to see, especially outside of the exotics, it's going to be these two numbers. Those are your pips, right? So in this case, if the price went up to, say, 1.06780, right? Let's go ahead and just copy this. So if the price rose a few thousandths of a penny to 1.06780, you're now looking at an increase in 6 pips. So 72 to 78 is 6 pips. Okay. So why are pips important in Forex? Well, because in Forex, this goes back. In Forex, you actually have to trade some pretty decent sized money to make any money. Like I said, there's leverage, 50 to 1. And you're actually working in lots. Okay, so a lot is going to be, I think, $1 a pip. So let's say, actually, I think it's at $10 a pip. So I'm gonna do this from memory, and then we're gonna verify this online. So I believe a lot equals $10 a pip. So a mini lot is 1.1 lots equals $1 pip, and a micro lot equals 0.01 lots equals 10 cents a pip. Okay, so let's verify that, because it's been a minute since I've had to even deal with pips. I used to trade on MetaTrader, which means that you do have to, measure everything in pips, right? But now I trade on Oanda, which is a U.S. regulated exchange. And again, I'm not necessarily recommending Oanda. It's just where I like to trade. I like that it's regulated. I'm in the U.S., so that is helpful. So be that as it may, let's go over to pips. I'm going to just go to what is a pip in the search. Definition of, okay, what are pips in Forex trading? Investopedia. Okay, it's a great place to go. It's a good backstop. The smallest whole unit price movement that an exchange rate can make based on Forex market convention. Most currency pairs are priced out to 4 decimal places, as we talked about. So it is, a pip is 1/100th of a basis point. So in other words, let's see here. Okay, let's see here. Calculating pip value. Looking for a lot. Okay, it's not talking about lots, so let's go ahead and ask Forex lot. Standard lot, here it is. Let me bring up the chat just in case I missed anything here. Okay, so Gigi says, good morning, cowboy and fellow newbies. Pencils are sharpened, thinking caps are on. That's awesome. Ready for class. I love it. A standard lot is the equivalent of 100,000 units of the base currency in a Forex trade. So a standard lot represents that. A mini lot is 10,000 and a micro lot is 1,000. So far, I think I am correct. A 1 pip movement for a standard lot represents a $10 change. Okay, so I did have that right. Okay, so that means that if the price moves 10 pips, you made $100, or as the case they used here, a 50 pip movement means you made $500 with the standard lot. Okay, so I did have that right. And again, I haven't done this in a long time. So again, one lot, they call it a standard lot, is $10 a pip. So let's do a simulated trade here. Okay, let me make this nice and neat for everybody. Okay, so I'm gonna put this over here. Let's say that you entered a trade right here and you risked one lot and you exited down here, or let's just say you exited right here, right where it is. Well, price went from 1.06883, if you can see it on the far right, down to 1.06698. So let's just make it nice and neat to 693. And that means that price went down 7 pips. You were 7 pips into profit, which means you made $70 on a standard lot. Okay, so the way to understand lots and how to do the math is, okay, there is a position size calculator that just makes this really easy. You don't have to think about it. Over at babypips.com, which is a great resource. Okay, so this is really good. Now, anybody who's been through my courses understands money management. Okay, so and we'll talk a little bit about that today too, because this whole thing this position size calculator takes the thought out of everything. And if you're trading on Oanda, it does the math for you, so you can just put whatever dollar amount you're comfortable risking, right? So in this case, I do 2% of my entire account as a standard trade, meaning that if I've got a $100,000 account, then the biggest trade I'm going to make is a $2,000 trade, meaning I'm going to risk $2,000, meaning back to our example here, if price had stopped out, if price, instead of going all the way to profit here, if price had gone to stop out, I would lose $2,000 max. Okay, so that's how I roll. All right, I do a 2% money management. And again, we'll talk about that in a bit, but just understand my risk percentage is 2%. Okay, my account balance we'll say is 100,000, just to keep the example relevant. And then a stop loss we'll say was 7 pips, right? So I actually we'll go to the example and actually show what it is. We go from 885. Okay, so 1.06883 to 1.07039. So that would be 88, 98. So that's about 15 pips. Ah, man. So I guess I did my profit taking wrong. So 883 to 039 is roughly 15 pips. You know, it's not exact. I can do the math, but it's fine. So stop loss will say 15 pips. Okay. So I got a $100,000 account balance. I only want to risk 2% of my entire account at the most. Stop loss is 15 pips. That means that I can risk, obviously, you know, 2,000 like we talked about earlier. So the position size, aka units, is going to be, you know, like let's just say you're trading over it at Oanda and you want to just do units, then you can use that unit amount. But if you're actually, you know, trading lots, if you're doing this in a standard manner, like if you're trading over MetaTrader and you're actually entering lots. Now, it's been like 2 or 3 years since I've used MetaTrader, so perhaps they've updated it. But in this case, you would just do 13 standard lots. So, and that is, you know, a typical way to do a trade on these exchanges. It's going to ask you like how many lots you want. Okay. Now, if you did have a like $1,000 account, and you're going to notice that it's actually 0.13 standard lots. So it's 0.13 lots. It's actually 1.3 mini lots. But just, you know, it's always going to ask you in standard lots what the size of your trade is. I know the screen might be a little bit small. Wow, it's only zoomed in 100. Okay. Sorry, for anybody who couldn't see this, we'll go over that example again. So if my account balance was 100,000, okay, and I'm risking 2%, I got 15 pips. I'm going to calculate, it's 13 standard lots, okay? So now on Oanda, I can just type in $2,000 and it'll do the lot calculation for me. But on MetaTrader, last time I used it, I would actually have to put in 13 lots. Now there's, you know, mini lots, micro lots. That's fine. Most of the time it's just going to ask you in lots. It's just, I don't know why this puts that there, but you know, maybe there are some exchanges that will want to know in many lots, but in this case, it's a standard lot. And then again, if you have a $1,000 account balance, you're risking 2%. That means if you stop out, you are only going to lose $20. And it's the same exact trade with a 15 pip to your stop loss. Do a calculation, and now you would be putting in 0.1333 standard lots. So we are live every weekday, 8:30 AM EST, giving out free content. Come check us out on YouTube. Come talk to us. Go over to the website. That's www.algofactory.tech. Again, www.algofactory.tech. And for a limited time promotional offer, we are giving out memberships at $49.99 a month. There's a ton that we're offering over there. Come see what that's about. Also, you can see our Twitter link. All the links are up on YouTube. Come talk to us on social media. See us on the live YouTube videos. We hope to see you soon.